Welcome, curious minds. Today, we're taking a deep dive into the latest financial pulse of Cummins Inc. I mean, this is a global leader that quite literally powers so much of our world. And we're not just looking at their Q2 2025 earnings call. We got their detailed SEC filings, recent press releases, really trying to understand how this industrial giant is navigating some, well, pretty dynamic market conditions.
That's exactly right. And our mission today is, to pull out the most important nuggets from all these sources. We want to help you understand not just the numbers, but the story, the strategic story they tell about Cummins' direction, and its resilience, really, in these changing times. We'll pinpoint where they're seeing strong growth, where they're maybe facing some headwinds, and what that might mean for their future, especially with that big Destination Zero strategy they're pursuing.
Okay, so let's unpack this then. Cummins reported their results for the second quarter of 2025, right? Covering the 3 months ended June 30th. What immediately jumps out from the top-line numbers? Is there anything surprising?
Yeah, what's really fascinating here is a contrast, actually. So total revenues for Q2, they were $8.6 billion. That's actually a slight decrease, 2% from the same time last year, which was $8.796 billion. But, and this is the key part, despite that little dip in sales, net income attributable to Cummins Inc., it actually rose significantly. We're talking $890 million or 6.43 cents per diluted share. Compare that to $726 million or 5.26 per share in Q2 2024. Big jump.
Right, so revenue down a touch, but net income up quite a bit.
Yeah.
That's definitely interesting. What's driving that increase in profitability then? How'd they manage that?
It really highlights, strong operational management. The company achieved an EBITDA of $1.6 billion. That's 18.4% of sales,
Yeah.
which is way up from $1.3 billion or 15.3% of sales a year ago. That's record profitability, and it's driven by a few things. Strong growth in power generation markets. Think data centers, commercial sectors, also favorable non-tariff pricing, especially when they launched updated engine products in light-duty markets. And lower compensation expenses played a part too.
Okay, hold on. Favorable non-tariff pricing. What does that actually mean in practice?
Good question. It basically means they manage to get better prices for their products, boosting margins, without it being related to, say, import-export tariffs. It probably points to strong demand or maybe less competition for those specific updated products, letting them command a bit more. And yeah, their chair and CEO, Jennifer Rumsey, she specifically noted this stark contrast, right? Really robust demand in power generation, but at the same time, declining end user confidence in markets that are more sensitive to the economy, like trucking.
That makes sense. It paints a picture of a split market, really.
Yeah.
So let's dig deeper into where these shifts are happening. Which segments are truly, powering the company's performance and which ones are feeling that economic squeeze?
Yeah, if we connect this to the bigger picture, the performance is quite varied across their, 5 business segments. So first, the power systems and distribution segments, they were really leading the charge. Distribution segment sales hit $3.0 billion. That's up 7% from Q2 2024. And its EBITDA, wow, jumped an impressive 42% to $445 million. That's 14.6% of sales.
42% jump in EBITDA. That's huge.
It is. And similarly, the power systems segment, sales there increased 19% to $1.9 billion. And its EBITDA surged 43% to $430 million, or get this, 22.8% of sales. Very profitable.
Wow. Okay, so what's driving that surge in power systems and distribution?
It's really strong demand, especially in North America and China, driven by those power generation products we mentioned. Think data centers, again, mission-critical markets. They also launched a new 17-liter engine platform generator. It's called the S17 Centum Genset, designed to produce up to a megawatt of power, but in a compact footprint. They're targeting critical segments like commercial properties, healthcare, that sort of thing.
Okay, so that's the strong side. What about the headwinds? Which segments are facing challenges?
Right. So in contrast, you look at the engine segment. Total sales there decreased 8% to $2.9 billion in Q2. And this was largely due to, weaker demand in North American heavy-duty and medium-duty truck markets. Heavy-duty truck shipments were down 21%, medium-duty down 8% compared to last year.
21% down in heavy-duty trucks.
Ouch. Yeah, that's significant. And the component segment also saw total sales decrease by 9%, down to $2.7 billion. That was mainly because of lower demand in North American drivetrain and braking systems, and also reduced sales over in India.
So a real mixed bag then. Engine and components down, power systems and distribution way up. What about Accelera? That's their new energy zero emissions focused segment, right? How's that doing?
Accelerate, yeah, the one focused on electrified power systems hydrogen production. It's key to their Destination Zero plan. It reported sales of $105 million, which was actually down 5%, but its EBITDA loss improved. It went from minus $117 million last year to minus $100 million this quarter.
Okay, so sales down slightly, but losing less money. What does that tell us?
It reflects their continued and pretty heavy investments in these zero emissions technologies. Even though, electrolyzer installations saw lower sales this quarter, that was partly offset by better sales of electrified powertrains. It's clearly a long-term play for them. They're funding the future, even if it means losses right now.
It really sounds like the company's diversified portfolio is serving as a cushion, doesn't it? Allowing those strong performers to offset the weaker areas.
Absolutely. That diversification seems key right now.
So, moving beyond the segment breakdown, what about the overall financial health? Any notable strategic moves from Cummins during this period? How are they managing their capital, positioning for the future?
Yeah, this raises that important question, how are they managing their money and setting themselves up? Well, first off, cash flow improved dramatically. For the first 6 months of 2025, Cummins generated $782 million in cash from operations. That's a huge turnaround from using $575 million in cash in the first half of 2024.
Wow, from negative half a billion to positive almost 800 million. What caused that swing?
The big reason was lower working capital requirements. Specifically, they didn't have that massive $1.9 billion payment related to some settlement agreements that they had to make back in 2024. Take that out, and the underlying cash flow picture looks much healthier. And at the end of Q2, they had a strong liquidity position, $3.1 billion in cash and marketable securities, plus access to $4 billion in credit facilities. So, plenty of cushion.
Okay, strong cash flow, good liquidity. What about debt?
Their debt-to-capital ratio was 38.7% at the end of June, just a tiny increase from 38.4% at the end of 2024. Still very manageable. They did issue $2 billion in new senior unsecured notes back in May, with maturities in 2028, 2031, and 2035, so locking in some longer-term debt. And they also settled various interest rate swaps and lock agreements, basically managing their exposure to changing interest rates. Standard financial housekeeping, really.
Makes sense. And any news for shareholders?
Wow.
Or on the leadership front?
It's definitely positive news for shareholders. The board authorized a 10% increase in the quarterly cash dividend. It's going up from $1.82 to $2 per share. And this marks their 16th consecutive year of increasing that quarterly dividend. Pretty solid track record.
16 years running. That sends a strong signal of confidence.
It does. And adding to that positive sentiment, Jennifer Rumsey, the chair and CEO, she was recognized as one of Barron's top CEOs of 2025. They cited her visionary leadership, commitment to innovation, and sustainability. So, external validation for her strategy.
That's quite an accolade. Okay, so looking ahead then, given all these moving parts, strength here, weakness there, investment, leadership recognition, what's Cummins' outlook for the rest of 2025? Are they providing guidance?
Well, interestingly, they have not reinstated a full-year outlook for revenue or profitability. They're citing continued economic and, importantly, regulatory uncertainty.
Uncertainty. So no firm numbers for the full year.
Exactly. They do anticipate continued strong demand in power systems, and they expect the aftermarket business to be stable, but they're bracing for a sharp decline in North America truck demand in the second half of 2025. They also mentioned challenges like increasing costs, tariffs, potential trade disruptions, the usual suspects. And there's another wrinkle. This one big, beautiful bill act.
Right, the new U.S. tax law signed in July.
Yeah. It introduces significant tax changes for corporations, and Cummins is still figuring out the financial impact. Plus, there's still ongoing uncertainty about the North American emissions regulations for 2027. So, a lot of clouds on the horizon they're watching.
Okay, so wrapping this up, what does this all mean for you listening? Whether you're interested in the industrial sector, maybe clean energy, or just how a huge global company steers through, well, a complex economic landscape. Cummins' Q2 results, I think, paint a really clear picture. It's a company leaning hard on its diverse portfolio and some pretty disciplined management to stay profitable, even when overall revenue faces headwinds. It's like a case study in strategic resilience.
Indeed. That strategic focus on power generation is paying off right now. Their continuous investment in the future, electrified and hydrogen tech, despite the costs, that really stands out. And their outlook, it's cautious but transparent. It really makes you wonder, doesn't it? How effectively can Cummins keep leveraging these strengths in the robust markets like power gen to fund those significant destination zero investments, especially with all the ongoing economic and regulatory uncertainty swirling around? And, what impact will Jennifer Rumsey's recognized leadership have as they navigate these really pivotal shifts in the coming years? They're trying to transform for a whole new era of power. Lots to watch.